Yes, people, welcome back to the YouTube channel. Today I'm going to be breaking down some previous areas and also showing you the importance of psychological numbers within the charts. If you have followed me for some time, you know that these levels are great. The win rate is very high and the risk to reward you can get from them is also very, very rewarding. So basically what I want to do quickly, if you look down the right hand side of my DXY chart here, you can see that these highlighted numbers are every 50 pips or 50 points, depending on how you want to say it. What that means is that these are round psychological numbers. As humans, we like making things simple. So, obviously, entry points, exit points for institutions, for us as a whole, they are very, the good areas that we look at when we are looking to see potential areas for getting into trades and also getting out. You can see previously my markings on the zones that I have previously traded based off the DXY. You can see that a high majority of the time these areas work, and therefore that has obviously allowed me to, if you look at my journal over the past 4 or so months, I've only actually taken, I should say 5 to 6 months, I've only actually taken 4 losses, which is obviously very, very good. The win rate is stupidly high. The reason my win rate is stupidly high is because I basically only trade these psychological numbers accompanied with a couple of other confluences. So you can see based off these charts, these lines, that usually when price reaches these areas, you will get a nice reaction. So no matter what strategy you trade within the market, using these areas as something to highlight is always going to be beneficial for you in the long run. So what I will do, I'm just going to go onto a couple of currency pairs, and basically from then we can look and assess these levels. So if I understand that price is currently at this point within the market, I can maybe look above to see where price may react. Okay. So firstly, this is Australian dollar, US dollar. So you've got the 0.67 area. Great. You've got the 0.6750 because, as mentioned, they happen every 50 pips. And then you've also got the 0.68 all the way up there. If we also look, you've just got one more above price, and this is there. So if we now analyze this chart and think where may price react within the market, there's a few things that we can take into consideration. Firstly, we want to see how well respected these psychological levels are. And then secondly, we want to see if there's any confluences we can use to obviously look to enter a position. Whether you're looking to go short, whether you're looking to go long, you can see that even below, you have very simple things, even like here, a simple break and retest of the round psychological number with the market structure to accompany it. That is a very good reason for you to potentially go long into a trade. If we look where price currently is at the minute, what I'll need to do is just lower this here to there, and that is where price currently is. So let's now assess the market and go from there. If we look at the psychological number above the market, you can see that recently price has not really respected this level. However, in the past, you see that it was respected quite nicely. So then you need to make a decision yourself and say, well, if price has disrespected this level over and over recently, what are the chances of it happening again in the future? Probably quite high. So I would probably miss this psychological number because you can see that the market isn't respecting it as much as we like. If we go above, however, what can you see about the 0.67 area? You can see that price was resistance, 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 broke retest support, and then here we had a break retest as resistance. And you can see that when price has traded either sides of this level, there has been a large reaction. Therefore, I would say that this makes this level a valid area for you to trade within the market. If you to also maybe draw a Fibonacci on the chart, maybe you're a Fibonacci trader, you can see that actually the 78 Fibonacci lines up with this area. So for that reason, I can maybe extend my zone and use this as a confluence area when I am trading the market. So you can see just based off the psychological number initially, I've now used that to paint a picture moving forward about what may happen in the future. I've identified a very strong key level within the market that is accompanied by the round number, and now I also have a 78 Fibonacci to line up with these areas. So therefore, I could maybe expect price to come up, come into this area, and then drop and push down. What do we notice about every single time price reaches this area? Price pushes back down to the 0.6650 area, as you can see. So what you could potentially do in this scenario is set your pending order on the level. You could cover your stop loss above where price previously has rejected the level, and your TP or your TP1 could be down at the area below. So the next psychological number that we know price previously has respected as price has pushed down. So that's a great example of building confluence for a trade. Let's also look at the area that I mentioned below regarding the break and retest. So if we were to extend this zone further to the left, you can see that price has respected this area. However, we have broken through the area quite a few times and gone further down. So if I was to look to enter this position here, what you basically want to take into consideration is where the previous reactions have been. You can see that when price has broken through this level in the past, it has basically always stayed within this area. So what I can do is put my stop loss here, which is 35 pips, which is still quite large. But obviously, if I'm targeting the next psychological area, I still have over a 1 risk to reward. You may want to have a rule where you only use fixed risk to rewards and things like that. But you can see now, I've basically predicted where the market might go if I buy and where the market might go if I sell, and I will leave my areas like that. So you can see how quickly I've now been able to basically set my bias in terms of where I want to buy, where I want to sell, without having to spend hours sitting at the chart. You could now really, if you wanted, set these pending orders, go about your day, or you might want to manage these areas when price comes back to it and maybe get something like a price action entry if that's obviously what you choose to do. So I'm hopeful that this video has broken down these levels a little bit more clearly for you. I'm hoping you've learned something that you can now apply to your trading in the future. If you have liked it, please leave a comment and I'll see you in the